So that is all the announcements we have for tonight. So without further ado, I will hand it over to Anderson and Whitney.
Thank you for having us. We're super excited to be back here at Bait Office I again. I'm Alana Moses. I have with me Larry Atchison and Terry Valinsky, a recent UNC grad. And tonight we'll be presenting on governmental and not-for-profit accounting and auditing. I did want to, before I continue, tell just a bit about our firm. We were founded in 1968, so I think that makes this year 45 years for us. We employ approximately 20 full-time staff, provide a wide range of services that include audit and attestation, bookkeeping services and small business support, tax reporting and planning, and we also have some financial planning and investment opportunities. And we also do a lot in the community, and our firm actually has been to the World Food Bank and done one of those Saturday mornings, and it's a lot of fun, and you guys should do that. So first of all, just a brief overview of some of the industries that we audit. There's the for-profit or the private sector. Typically, they might need audits for financing, to apply for new loans, or to prove compliance of existing loan covenants. Not-for-profits, audits required for grant funding applications, and also financing. Governmental clients, the audits are required to meet statutory legal requirements that require them to publish financial statements, and they might also need to comply with grant compliance. Some basic terminology. GAAP, everybody knows that, right? Generally accepted accounting principles. GAS, or generally accepted auditing standards, and then GAS with 1A, government auditing standards. That can also be referred to as GAGAS. That contains standards for audits of government organizations, programs, activities, and functions. Now Larry will talk about the top 5 differences between not-for-profit and governmental accounting and for-profit.
Okay. First, I have a confession to make. I've never been to a Beta Alpha Psi meeting. This is exciting. I am a graduate of UNC, but I guess they didn't have Beta Alpha Psi back then.
No.
Nope. So, back then, just a few years ago, right, Alan?
Yeah, we couldn't have a Beta Alpha Psi chapter until we went through the AACSB accreditation.
Oh, okay.
And so then it took like 3 years after that. We had to meet the Beta Alpha Psi standards for 3 years before we got a charter.
So it had nothing to do with me, right? I just want to make that clear. So the top 5 differences between for-profit financial statements and non-profit or governmental financial statements. I can't stand them in place, sorry. Essentially, no income tax impact. That's mostly true. Nonprofits can still have unrelated business income that would have a tax implication, but essentially, for-profits will need to be concerned about income tax effect. And so for as auditors, we need to assess, is the client going to potentially want to underestimate their net income in order to minimize their tax liability? As opposed to a nonprofit, it's going to be almost the opposite. They may want to accentuate the revenue and downplay the expenses so they look better to a donor or for grant funding. So some of those motivations we need to be aware of regarding our clients. Obviously, with for-profit companies, they typically will report earnings per share or a stock price. That really has no bearing in the nonprofit or governmental sector. But instead, budget reporting is really very important for both of those organizations, the nonprofits and the governmental. Earnings per share is kind of a performance measure, and so in the nonprofit sector, the budget performance, how you have performed relative to the budget, is really important for management. The other two distinctions of nonprofit and governmental reporting have to do with resource or legal restrictions. And so the resource restrictions refer to donors who give money to a nonprofit and say, use this for your scholarship program, or use this to purchase a vehicle. So they're restricting how that organization can use those donations. And the financial reporting needs to recognize that, and we'll see shortly how they do that. And then the legal restrictions is probably more relevant on the governmental side, where certain revenue streams have been established by a regulation, a ballot measure, and so legally they can only use that money for a particular area. So for example, you may have a sales tax levy that is restricted to funding certain types of projects. When they built Coors Field down in Denver, they had a specific revenue source to pay for that stadium. And so that the legal restrictions will come through the governmental reporting model. Is this me too?
Yes.
Okay. So hopefully this is review. It's not new information. So these are the basic financial statements that you'll see in a for-profit environment. You may also see a statement of other comprehensive income, that sort of thing, but these are kind of the four typical ones. And then on the nonprofit side, the first three are very similar to what you see on the for-profit side. The fourth one is statement of functional expenses. Sometimes it's not the official title, but it's not always required. Any nonprofit can issue a statement of functional expense, but only voluntary health and welfare organizations are required to do that. And that title, voluntary health and welfare, voluntary refers to they receive voluntary donations from donors, and that's how they fund their operations. Health and welfare refers to the types of programs that they conduct. And so the reason a statement of functional expenses is helpful, it takes the natural expense classifications, natural being like salary, utilities, office supplies, telephone, those sort of things, and then we'll allocate those to at least three categories: program, management and administration, and fundraising. On the program side, sometimes that's one program, or sometimes it's going to be 4, 5, 6, as many programs as they have. And that just helps provide information about the individual programs, what types of expenses are involved with conducting those programs, but also how much of their operations go toward overhead, the administrative side, and how much goes toward fundraising. Because as a nonprofit, you don't want to have too much of your spending in those categories. Donors want to see that you're spending your money on program. That's why you exist. So that's a statement of functional expenses. And I think you can see this pretty well. To relate back to the comment about restricted resources for nonprofits, this is an example of University of Northern Colorado Foundation 2002 audit. And so you'll see from these columns, there's one for unrestricted, one for temporarily restricted, and one for permanently restricted. And these designations have to do with are there external restrictions associated with these revenue sources? Unrestricted means no. The board can do with those funds whatever they would like. Temporarily restricted means that with the passage of time or by spending those funds on something that relates to that restriction, once they do that, that restriction goes away. So the restriction is temporary. And permanent kind of sounds like the restriction is always there. And the most obvious example there is an endowment, where the donor will say, here's $100,000, I want it invested forever, and just spend the investment earnings. And sometimes the donor will say, I don't care what you spend that on, but I want that principal always invested. Or they may say, I want this to go toward a scholarship program. So that's one way the nonprofit reporting model tracks or identifies what funds are related to external restrictions like that. Perhaps you would see or find it interesting that these two categories don't have any expenses. Well, that's kind of weird. How do you use money up if you don't have expenses? Well, the logic there, and I use logic loosely, but the logic is that once you have spent the money according to the restriction's gone away, and so expenses are only unrestricted. Some people think that makes sense, but that's the way it is. So that's the nonprofit example.
Okay, I'll talk a little bit about the financial statements you would see in a governmental entity. First, if you looked at a CAFR, which is a comprehensive annual financial report, you would see the government-wide financial statements. Those include a statement of net position, which is similar to a balance sheet, and a statement of activities, similar to an income statement. You would also find fund financial statements, which have proprietary funds and internal service funds. You would see a statement of cash flow only for proprietary funds, however. There would also be the notes to the financial statements. And then something that is required in a government entity is what's called required supplementary information, or RSI. We're going to take a look at the city of Greeley, some of their statements. This is for their 2012 audit. This is their statement of net position. And it is part of what I call the government-wide statements. It is broken out into governmental activities, business type activities, and then if you look to the right of the screen, you'll see two component units. Those are separate legal entities, but the city is financially responsible for them. The next two slides are this is the bottom half of the statement of net position. I've got two slides so it be more easily readable. I have highlighted there, circled, just the bottom line. So they're the assets over the liabilities was almost $680 million at the end of 2012. Okay, this is the second statement in the government-wide statements, the statement of activities. This presents information how the city's net position changed during the most recent fiscal year. All changes in net position are reported as soon as the underlying event gives rise to the change occurs, regardless of timing of related cash flows. So essentially this means that revenues and expenses are reported in this statement for some items that will only result in cash flows in future fiscal periods. Examples of this could be uncollected taxes and earned but unused compensated absences. So when companies have vacation that's not paid out. Both of the government-wide statements distinguish functions of the city that are principally supported by taxes and intergovernmental revenues, and those are the governmental activities from the other functions that are intended to recover all or a significant portion of their costs through user fees and charges. And those are the business type activities. And this is the second half of that statement of activities. Let's talk a little bit about fund accounting. Fund accounting emphasizes accountability rather than profitability. It's a vehicle to show what you have and what you've used. It's often used to ensure and demonstrate compliance with finance-related legal requirements. Both governmental entities and not-for-profits can have more than one general ledger or fund to track the activities of various portions of their organizations. This aids in reporting and tracking their spending requirements. Examples for governments include governmental funds, proprietary funds, fiduciary funds, which are trust or agency funds. Not-for-profits can hold funds based on restriction of funds, like endowment funds. We'll take another look at the city of Greeley. They have 27 individual governmental funds. 2 of those are major funds, so they are shown separately. That is the general fund there on the most left, and then the sales and use tax fund. The third column over, my apologies, that's someone turned on. The third column over is a combination of those 25 other funds. They're presented in the aggregate on this statement. Governmental funds are used to account for essentially the same functions reported as governmental activities and the government-wide financial statements that we looked at earlier. However, unlike the government-wide financial statements, these governmental fund financial statements focus on near-term inflows and outflows of spendable resources. So this slide and the next one are the fund statements for governmental funds for the city of Greeley. This one's a little more hard to read. But it shows you the statement of revenues, expenditures, and changes in fund balance. This one does. Let's see here, I think I went too far. Okay, all of the funds from the city of Greeley can be divided into 2 categories, the governmental funds and proprietary funds. We just looked at the fund statements for the governmental funds. The next 2 slides shows you the proprietary funds. The city of Greeley has 2 types of proprietary funds. They're the enterprise funds, which are the business type activities. The main ones for City of Greeley are sewer and water. Others include municipal golf courses, cemetery, and some other ones. The internal service funds are an accounting device that are used to accumulate and allocate costs internally among the city's various functions. For the City of Greeley, it uses internal service funds to account for maintaining its equipment and vehicles, information technology systems, a defined health and dental insurance plan, workers' compensation plan, copying and mail services, and a self-insurance program for liability claims. Getting back to the required supplementary information, it is defined as information that is designated, that a designated accounting standard requires to accompany the basic financial statements. It's not part of the basic financial statements, but the accounting standard setter has determined that it is needed to kind of get the full picture. In a government entity, examples could include the management discussion and analysis for governments. If you looked at the City of Greeley's CAFR, you would find several pages with this MD&A. Basically helps to make the user more easily read the financials and understand what is being presented. A specific item included could be schedule of funding, pension funding progress, and we'll look at that in just a minute. If this was a government entity that had roads and bridges, a schedule for that for the modified method of infrastructure would be needed. There can also be a comparison of actual expenses to budget. And audit procedures that we need to do for RSA include asking management how they created that information, looking at the information for consistency to prior years, and we always obtain a written response from management. So this is from the City of Greeley's CAFR. It is their schedule of the funding progress for their pension. So you can see at the top, it says require supplementary information. So I'm going to give it back to Larry so he can talk to you about accounting for grants.
From what Alana talked about, you may get the impression that government reporting is very involved, and it is. But that makes it exciting and a challenge to actually go out and audit an organization like that. The City of Greeley, kind of cool to go audit the city in which you live. Or we also do UNC's audits, so that's even better to go back to school and audit the school. You can't go and change your grades, but it's kind of fun to kind of see the other side of the organization. So now we're going to talk a little bit about, kind of drill down into certain areas of the financial statements and talk about some unique aspects for both nonprofit and governments. So one of the very common sources of funding is grants. Grants can come from other nonprofits. They can come from private foundations. They can come from government agencies, whether local, state, federal, that sort of thing. But essentially, a grant is money that's provided to an organization for some purpose, to administer a program, to provide services to other third parties, but it's essentially a contract. And from the accounting aspect as well as the auditing aspect, you can't just look at the title of the document and see, well, it says grant, so it must be a grant. So we'll follow those rules. You need to look at the terms of the funding and decide, well, does it meet the accounting definition of a grant? Or are they basically giving a donation to the organization? And so, in other words, you need to look at the substance of the funding, not the form. And so that's just one example of in accounting or in auditing where it's not black and white. It is subject to judgment. And so we encourage our nonprofit clients, when they have these situations, to document what criteria, what factors did they consider in deciding how they needed to report or account for particular funding. That way, when we come in and audit, we can assess what criteria they used and determine if we're comfortable with their conclusions on that. But essentially with grant accounting, the organization has to earn that revenue. Just because you receive the money, that's not earning it. You earn it by incurring expenses that relate to what the grant is for. So the grant may say, we'll give you money and we'll pay so much for each child that you deliver meals to, or to so many days of shelter that are provided to homeless, some criteria like that. So that's the earning mechanism. And the other consideration is the timing of when is it earned and when do you receive the cash. Sometimes you have to spend spend the money before you get it. That's always something a government can do. And so those are called reimbursement type grants. And so you incur the expenses, you report to the grantor how the funds were spent, and then you get reimbursed. So in that case, you're typically going to end up with a grant receivable on your financial statements. Other times, they may pay all the money up front, but you haven't earned it yet. So, okay, we'll put the cash, we'll deposit the cash. What's the offset? It's not revenue because we haven't earned it. Well, it's deferred revenue, which some of our clients get really upset because, well, if it's deferred revenue, why is it over here with my liabilities? Because that makes it look like something we have to pay, and instead it's something that'll be future revenue. And yet that's kind of how that works. From an audit standpoint, when we come in and take a look and know that we're dealing with grants, one of the more obvious things to look at is grant revenue and grant expense the same? If you earn grant revenue by incurring expenses, those need to be equal. So if you come in and that's not the case, you know somebody's got some work to do to straighten that out. And then Alana's going to talk about budgets.
Okay, we talked briefly earlier about how the budgets are more prevalent, more needed in not-for-profit and government agencies. It's a financial tool for planning, and government entities are required to have an adopted budget, and the government entity has a responsibility of fiscal accountability. So it can demonstrate that it's compliance, that it is in compliance, and how it is using the resources that it has been given. And if in a government financial statements, if your spending is over the budgeted amount, this needs to be disclosed. So and we'll turn it back to Larry.
So another component of nonprofit and government, well, primarily nonprofit financial reporting is contributions. And this is really a transaction that's unique to the nonprofit sector. Businesses would love to receive contributions, but their customers typically want something in return. And that's really a fundamental part of the definition of what is a contribution. A contribution is a non-reciprocal transaction. So it only goes one way. The donor is giving money to the organization, as opposed to a for-profit typical sales transaction, which is reciprocal because the customer receives a good or service and they pay the company for that. And we've talked about those contributions. The donor may attach restrictions on those, and we've kind of talked about temporary and permanently restricted. Since it's a non-reciprocal transaction, nonprofits go ahead and record that contribution as revenue, even before they've met that restriction. But as a nonprofit, they have a fiduciary responsibility to use those funds for the purpose that they were intended by the donor. And that fiduciary responsibility ultimately comes back to state statute. That's what drives that. So those are some of the inherent components of contributions. From an auditing standpoint, it's kind of a unique situation because the organization really doesn't know, for the most part in advance, what contributions they're going to receive. As opposed to a for-profit organization that they know when they ship a widget that the customer is going to pay them back. And so they know to expect that money. But in a nonprofit, you don't know to expect that donation coming in. You may have sent out materials and brochures, postcards, inviting them to donate, but you don't know who's actually going to act on that and respond. And so from an audit standpoint, how do we get our arms around the fact that have they really accounted for all the contributions that they received? And that's why it's really important for us to look at and assess the internal controls that the organization has around the contribution processing system. A lot of times in an audit situation, we will go ahead and send out a confirmation to selective donors, confirming the amount that they gave, whether there were restrictions or not. And, oh, by the way, were there any other donations that you provided to the organization? That's one way that we can reach out and see if they respond and say, oh yeah, by the way, we gave $5,000 back in January, and the organization's not showing $5,000 in January, that could be a problem for somebody. And that's a very simplistic look at contributions. There's many different ways, really cool ways that donors can structure a gift. And that's where it bridges into kind of the income tax area, because a lot of donors look at the tax benefits that they get in making a donation. And we could spend half a day on all those, but you're lucky because we won't. Well, not tonight. We talked before about the statement of functional expenses. Again, from an audit standpoint, how do you audit a schedule like this? Because some expenses are pretty easy to track, that yeah, it's pretty much this scholarship program. Where other expenses, like staff time, how do you know how much should be allocated to program versus administration versus fundraising? You take the executive director of the nonprofit, and they've got their hands in all aspects of the organization. Well, how do you decide, or how does the nonprofit decide how to allocate that person's time to those different categories? And there's a number of ways that they can do that, but from an audit standpoint, we want to see that they have a reasonable approach that they used to do those calculations. For a lot of nonprofits, they are very labor-intensive, staff-intensive. Salaries, compensation are their biggest expense. And so they may follow the rationale that once we get staff time allocated, there's so many other expenses that can follow the same percentages. Staff takes space, so you can allocate rent or buildings usage according to how the staff time is. They use equipment, they use supplies, they use the telephone. So a lot of those other expenses can fall in line once you get that big category. And then there's also the exceptions that you have to deal with and have some other rationale to do that. It's hard for us as auditors to come in and say, no, I don't think that's how you spent your time. I think it's more like this. You know, they're in the best position to evaluate that. We are looking at it from a year-to-year basis. Are they consistent? If there's a significant change in how the executive director's time is allocated, then, well, what drove that? What happened this year that was different than the year before? Ultimately, it comes down to, in many areas, these are estimates on behalf of management, and we just need to evaluate, do they have a reasonable basis for making those estimates, those allocations? for that statement. I bet the next one's yours.
Yep.
Sweet.
All right, fraud, that's a great topic, right? So you've heard of the fraud triangle, right? You need 3 components for fraud to be there. You need a need, an opportunity, and rationalization. So somebody's broke, they're the finance director, they've got the opportunity to do something, and a rationalization is, oh, you haven't gotten a raise the last 2 years, so therefore, it's fine. That's how fraud is committed. And fraud doesn't just mean the theft of actual assets. It can also mean purposefully misstating the financial statements. Entities could do that because maybe they meet a certain ratio, then somebody gets a bonus, or if they something like that. Fraud risks differ in the various industries, as does the motives. And then in smaller organizations, segregation of duties is a risk that, if not properly mitigated to the best of the entity's ability, could lead to fraud. So typically in the not-for-profit world and government world, there aren't monetary bonuses for management for meeting certain financial benchmarks. Maybe there's an exception to that, but typically I'd say there wouldn't be. So why would they want to misstate their financial statements? What motive would they have? Maybe to attract donors, so we can bump our revenues up or make us look more attractive on paper. Donors will want to give to us. Keep the banks happy. We've got to meet certain loan covenants and ratios to meet budgeted targets, and then to meet board expectations. They're all reasons why companies might want to misstate. Getting to the end, we're going to talk about the bottom line, and we'll have Larry start off.
So the bottom line typically refers to, in a for-profit organization, it refers to net income. For a nonprofit and a government, should they have a bottom line? Should they have net income? Is that okay? But it says non-profit. How can a non-profit have a profit? Wouldn't that make it a profit organization? And the answer is, well, a nonprofit is basically like a business. They only enjoy an exemption from income taxes, which allows donors to get a tax deduction for donations to the organization. But they basically need to run like a business. And there's unfortunately a lot of nonprofit management who haven't figured that out yet, and their hearts are in the right place. They're totally dedicated to the cause of the organization. And whenever money comes in, they want to get it out and give it to the groups that they're serving, without really realizing, well, wait a minute, we need to make sure we can pay our staff and pay the bills and all that. So it's really critical that they recognize that I'm just like the grocery store down the street. I'm a business. I need some reserves to operate on. When I was talking about grants, sometimes you spend the money before you get the money. Well, that means you have other funds that you've received in the past that you could use to pay those expenses before you get the grant money. So a common question we get from nonprofits is, okay, I get that we're a business and we can make a profit, but how much is too much? For a lot of nonprofits, they are evaluated based on what their net assets are. Net assets is like their equity, their net worth, if you will. And so a rule of thumb for a lot of nonprofits is to try and get to the point where they have net assets equal to between 4 and 6 months worth of operating expenses. So if their operating expenses are $1 million for the year, this rule of thumb would say it might be okay for them to have $400,000 to $600,000. That would be a very healthy nonprofit. Most nonprofits operate on a much slimmer margin, perhaps 1 to 2 months or even less than 1 month. The tightrope that they're walking is they want to have enough to stay in business, but also to show to a donor or a granting agency that, yes, I'm going to be around to deliver this service next year and the next year. But then they also don't want to show too much in net assets because the donor's going to say, wow, you got a pretty nice bottom line there. There's this other organization that's not doing so well. I'm going to give my donation to them because they obviously need it. And that's often how the donors think. They're thinking with their hearts instead of their minds. They may not realize that, oh, this organization that they think needs it isn't very well managed, and that's why they're in that situation, as opposed to one that has a healthy bottom line or net asset balance. They're well managed, they plan for the future, and that's really the better organization to give money to. One way to maybe illustrate that, again, going back to the UNC Foundation, from their 2012 audit. So this is their statement of financial position. And they have, in case you can't see this, they have total assets of $95 million. Their net asset total is $93 million. Very little in the way of liabilities, which is what you would expect for a foundation. Now you'll see various lines in this net asset category that make up that 93 million. And some of those classifications relate to unrestricted, meaning, again, no outside restriction. They can do with those funds whatever they want. The first line is undesignated, which is $9.5 million. That means that their board, the foundation's board, has not made any decisions on how to use that $9.5 million. Compared to the next line, for designated, the board has taken official action to identify how they want to use $4.4 million. Now I'll get back to what, in this case, what those designations are. And then we get into the restricted areas, temporarily and permanently, and those two make up 79 million of the 93. So what that really does is it takes you from a $93 million net asset number that a donor may say, wow, you got lots of money. I'm going to take my money over here. To drill down to, well, so much of it is tied up because of other donors, their restrictions, or plans that the board has made for $4.4 million. And so they really are utilizing those funds properly and wisely and putting them to good use. So if I was in your shoes, then I would go home tonight and I'd go on the foundation's website and take a look at the entire audit report. There's a lot of good information in there. Now, I know none of you will do that, but it's amazing what you can learn about an organization just by looking at that. So the 4.4 million of board designated, 1.6 million is designated to a president's fund. I don't know specifically what that is entailed, but I suspect it's for the university's president to have some funds that can be utilized as needed. A certain situation comes up, that sort of thing. There's $1.5 million that's designated as quasi-endowments. Quasi is kind of a fun word. That means it's kind of an endowment, which also means that it'll be treated as an endowment until something happens in the future or until a certain number of years has passed. So that's quasi, kind of an almost endowment. There is 1.1 million designated for Partnership for Academic and Student Support. What that is a program that the foundation put together. They had these unrestricted dollars and said, we're going to take some of those dollars and we're going to have a matching program to encourage other donors to give to certain activities, scholarships, that sort of thing. And so to encourage them to give additional money to the foundation, we're going to have a matching program to add these funds to what they want to donate for. And so that's really been a successful mechanism for the foundation to use. So that's most of what that 4.4 is. So essentially, the financial statement is not just numbers, it's really telling a story. Once you get into what's behind the numbers, what do the numbers represent, and how do they relate to what the organization is trying to accomplish. So I probably get more emotional about nonprofit financials than most people should. But.
Quick look at the bottom line for governmental agencies. So I think it's been a couple of years ago, GASB 54 came out, and this changed the way the governments were to classify their fund balance a bit. Basically, they need to have there can be a non-spendable portion, and this might be inventory. Spendable is broken out based on the relative strength of the constraints that control how specific amounts can be spent. This is made up of restricted, so it's like a not-for-profit. There's restrictions on how it can be spent. Committed can only be used for specific purposes that the board has said so. So similar to the board designated for not-for-profit. Assigned, so these are the monies that are intended to be used for a specific purpose. So they've already been earmarked. And then unassigned, this is all the spendable amounts not included in one of the other three classifications. I showed you this statement earlier. This is from the City of Greeley's government-wide financial statements. At the bottom, circled in red, you can see the net position. So they have, let's see here, approximately $255 million invested in capital assets. That's less any debt that was required to fund those. Just for the governmental activity, so I guess in total is about 571 million. So we showed earlier that they had the total net position or net assets is just about $680 million. So $571 million of that is basically not spendable. You'll see restrictions for Tabor Emergency Reserve, debt service, and then a non-spendable portion for the principal on some funds. And then they've got about $103 million in unrestricted funds. And then this is from the governmental fund statement, their balance sheet, and there are the four categories that I talked about: the non-spendable, restricted, committed, assigned, and unassigned. If you guys, when you're done looking at the UNC Foundation statements, go online, City of Greeley, you can find their entire 208-page CAFR online, which includes all of these statements that I've shown here, plus a bazillion more. And a lot of, really, I mean, a lot of verbiage for the management discussion analysis, and just a lot of information that you know, if you're a Greeley citizen, you might find interesting. So there really is some good reading out there. And with that, we welcome any questions if you have any. Professor McConnell.
I have a question for Larry. Larry, most of the CPA firms that do audit work, audit governmental and not-for-profit. About how many clients do you have in these areas, roughly?
Number-wise, I'm not sure. The nonprofit and governmental side probably makes up 40% of our audit practice, so it's pretty sizable.
And a lot of firms are that way.
Yeah.
And so what I'm getting to is pushing a class that's offered next semester. Not-for-profit class. And it's one class that you can, it's an elective in both the undergraduate and the graduate program. So therefore, not everybody takes it. In fact, usually it's a fairly small class, but you can register for it. It's the only class we have that's dual number. It's got a graduate number, it's got an undergraduate number. So you can take it as an elective in either of those programs. But there's always a governmental question on the CPA exam or problem. And it's helpful there. 40% roughly of their audit business is governmental and not-for-profit. A lot of other firms are the same way. And it's a different type of accounting, especially the governmental side, than what you have for private business. And so there's a good chance that you'll be working with governmental clients and what they call fund accounting. UNC Foundation, of course, that's attractive because it's a June 30th year end, isn't it? Mm-hmm. So that audit does not fall with the calendar year end. So a lot of nonprofits have a different year end, and you can do the audits other than during your busy time. It falls a little more and it fills up the work schedule throughout other times of the year. But I'd encourage you to look at that course, and hopefully some of you will sign up for it. I don't want 60 in there, but I guess if all of you signed up for it, I'd put up with all of you. And UNC Foundation, how many of you have received a scholarship? Who administers most of those scholarships? UNC Foundation. And so your scholarship is coming through because someone has donated to the UNC Foundation. We have, our family has a scholarship through the UNC Foundation. Our oldest son was killed in an automobile accident, and at that time, UNC had a laboratory school, and he graduated from that high school as well as from UNC, and so we set up a scholarship for a graduate of the high school, of the laboratory school, to come to UNC for a scholarship to help them with their freshman year. And then, of course, the lab school closed. It's a building standing vacant over on the other campus, or most of it's vacant. It has asbestos in it. It's very expensive to remodel that type of building. So then we had to have it rewritten because now there's a university high school in town. It's a charter school. And so we redid the agreement with the foundation so that the scholarship would go to a student from that charter high school to come to UNC. And so it's only open to the students that are going to come to UNC. And it's administered by the foundation. We have nothing to do with selecting what the student receives. The teachers at the high school do that. The only thing we're connected with it is usually somebody from the family goes out to their awards night and presents a scholarship. Other than that, it's run by the foundation.
One other interesting program that the foundation has is many years ago, they took, again, some of those unrestricted dollars and set up a program so that business students can take care of the investing of those funds. And it's interesting how that fund has performed on a par with the funds that are professionally managed. But what great experience to actually make investment decisions where real dollars are really going into those investments.
Have any of you taken that course where they actually do the management?
Yeah.
I think it's part of a course. It used to be anyhow, yeah. Great experience.
Other questions?
What parts of the governmental or nonprofit accounting do you find intriguing for either of you?
Well, I spend quite a bit of my year, probably about half of my year working on governmental agencies and audits. And to me, there's so many statements in the government entity, and so really you kind of, it's easier if you kind of start at the back and then it kind of all works your way forward. So statements I didn't show you were many combining schedules of some of these, some of those 27 funds that I talked about, and just numerous other statements, and then kind of roll forward, and then at the front you've got the government-wide statement. So it's so different from just a typical balance sheet and income statement, just kind of a four-statement kind of entity that is challenging, but it's kind of fun.
I think this is intriguing. I think on the nonprofit side, I really enjoy working with the Form 990 tax returns of the nonprofits. Alan's laughing. Because this is about as public a document as you can have. Obviously, it's filed with the IRS, but within a few months of the IRS receiving it, then guidestar.org receives those and posts them online. And so I think a lot of nonprofits don't realize how visible that is and what a great tool they have. Yeah, they have to file the 990, but there's a lot of information that they can put into that return voluntarily to promote the programs that they do, the difference that they make, the governance policies that they use in managing the organization. And so it's a service that we can provide to kind of point that out to them and assist them in really capitalizing in how they complete that tax returns.
You're in a nonprofit organization right here. Beta Alpha Psi is a 501c3 nonprofit. And we don't file a tax return. We send our information to the national office, and our information is part of the Beta Alpha Psi 990 return. But you're active in a nonprofit organization. Every once in a while, Larry, I have a firm that throws a wrench into things for me. And about every 3 years, somebody wants a W-9 for coming to the banquet. So we got a request, don't. It's okay, because I finally got it figured out. So one firm this year asked for it. I called the partner that does the interviewing up here and said, "What the hell are you doing here? You don't need that." "Well, that came out of our home office," he said. So today I called the Beta Alpha Psi office, and they said, "Oh yeah, we got all kinds of those signed here. We'll either fax it or email it to you. How do you want it?" I said, "Email it to me so that we can set it." They really don't need our ID number to come to the banquet if they do that. But, and he agreed with me, but he said, "I can't do anything about it. It came out of the whole the request." So don't request one.
Okay, we could track it down anyway.
Seeing as how you guys kind of really take a really in-depth look at non-for-profits. How do you guys feel is a good way to evaluate the performance of a non-for-profit? What's a good way to tell this is a good organization that I should invest my time in, invest my resources in, something that I really want to make an impact?
Couple things to look at. One is on their expenses, what portion goes toward management and administrative, as well as fundraising. Now, depending on what type of nonprofit it is, like the UNC Foundation, they're in the business of raising funds, and so their fundraising expenses are going to be larger than, say, a youth mentoring program that's primarily grant funded. But kind of a rule of thumb there is the Better Business Bureau likes to see program spending to be at least 40% of expenses. Well, that's actually a fairly low bar. We tend to see more in the 70 to 80% program spending. That way your dollars are being utilized not to pay for management, although that's important, but it's going to the program that the nonprofit's all about. So that's one way. The net assets, how much do they have in net assets, and how much is subject to external restrictions, and if they have a lot of unrestricted dollars, have they at least identified ways in which the board has stipulated how those funds will be spent. Maybe they know in 3 years or 5 years they need to expand their facility, and so they're taking some of those unrestricted dollars, designating it to that future building expansion. That's good management. That's planning ahead. That's knowing your business. Does that kind of get it? Okay.
How do firms secure a government or like a city's government as a client? Is there a bidding process, or does the government get to choose? How does that work?
It can work different ways. For UNC, who we're currently auditing, that job is actually done through the state auditor's office. So the state auditor's office contracts with UNC, and then we're kind of been awarded that. I think the city of Greeley, I believe, was through a proposal and bid process. So it depends on the entity.
Typically, they'll have a policy that they've established for audit services. Some will require that they go out to bid every 3 or 5 years. Some say that they have to change after 5 years. It's generally their call to make. Any organization that's tied into the state auditor's office, obviously UNC, but even like UNC Foundation, which is a separate legal entity, has its own board, they're required to follow the auditor rotation policy of the state auditor's office. So that's probably more than you wanted to know about that question.
For example, that rotation for UNC, we just finished our 5th year, so next spring we'll hear, where we might be headed next, but that's usually a 5-year deal from the state auditor's office. Great. Well, thank you for your time, and hope that you've taken away a little something about governments and not-for-profits. And I'm assuming that maybe the governmental class is still offered as an elective here. I would highly suggest taking it. When I went to school, it didn't fit into my schedule, and I'm like, well, I can just take another elective that works more easily. I wish I would have done that, so I suggest taking that and this new not-for-profit class.
That's the class I was talking.
Yeah, so
It's offered next semester. It's offered 1 semester a year.
I think it'll serve you well, and especially come as you study for the CPA exam, it'll help there as well. Thank you.
Exact question.
Good job.
Any questions? So self-motivated.
I ran and then I made gallery keeping in case you get, requests. And I've got, but they emailed it because they like it.
How long have you had this nonprofit?
Oh, I put it in, Governmental. Governmental, well, no, we don't have a nonprofit. Part of our, it's heavier.